Hey everyone, hope you're doing well. So this video is not about market update. It's regarding something new uh, in which I will tell about the trader and the investor. Okay, so basically in this video I am going to clear up a huge confusion in crypto, knowing whether you are trading or investing. Okay, so if you can see my screen, here I have put in the first section, I have put 11 point of traders and the investor. In the second term, if you see my, I have drawn three charts, okay, in which I told you how they actually operate, okay. And the third one we will see who is in more benefit psychologically, okay. So let's dive in. So basically, if you ask me who is a trader is basically a person who wants short-term gains, okay? And who is investor? Investor basically believe in long-term growth and potential. Got it? So a trader basically uh, use a technical analysis, okay, like candlesticks and other things, RSI indicators and order flow etc. To trigger trades, okay. Uh, an investor basically believes on fundamentals, okay. He rely more on fundamental analysis. And the third one is basically trader uh, actually react to the volatility. If a market has a quick volatility, a trader should react to it. If he has a lot of position open, he should react to the market volatility. Whether investor don't care about the volatility, they basically buy the dips and they buy the fear and sell the greed. That's it. So the fifth one is basically a trader needs rapid market swing and emotions such as fear and greed. So basically, if you're trading, you should know about the fear and greed. So if you are trading in short term, you will get so much fears and greed based on the market volatility, okay. But an investor basically he doesn't care about the daily price fluctuation. He only operate in the max fear and the max greed, okay. The sixth one is basically the trader heavily rely on technical tools, okay. So technical tools, like real-time charts, volume indicator, order book data. So usually he is totally reliable on some technical tools, okay. But the investor basically use a longer-term chart analysis and trend lines to identify underlying patterns. Basically, in short term, a trader usually trade the days and the weeks, but the investor trade months like years, okay. So the eighth one is basically a trader aim for short-term profit. Okay, so investor basically aim for the longer term profit. Okay, so the ninth one is basically the trader usually do day trading or swing trading, but in as an investor, he should look for the longer term trading. Okay, so what's the time frame trader use? Trader use 1 hour, 4 hour, 1 day time frame to trigger his trade. Whether the investor usually use the higher time frames to find out the confluences and add up or sell up their uh, portfolios coin, okay. So the 11th one is basically a trader usually trade the trend, okay. So with the trends change, their biases also change with the time. But investors don't care about what the trend is. They usually invest in red days with usually double digits discount, that is like 10 to 50%. So basically, here are the few key difference that separate the trader from investor. So now we will look how they actually operate. Okay, so if you see how actually a trader operate in an uptrend, usually trader wait for a pullback. Okay, they buy here. Uh, they usually like here we told here I told you they usually trade the trends, okay. So now if the price is an uptrend, they usually wait for a pullback to enter, and a pullback they usually enter and they targets the above highs, okay, like this, okay. So if the market trend is downside, they usually wait for a pullback to short, okay. So every pullback to the upside, they look for the short positions and the targets new lows, okay. uh, whether the investor usually don't care about the trend, okay. They usually, if a price is in downtrend, they usually buy at the key levels, okay. They like they bought here, then they did DCA here and then here, okay. So basically they split up their investment and like put the buy orders at the each key levels, okay. So after that, when an uptrend begins, they try to sell at the major resistance, okay. As you can see, they usually sell at the major resistance. Now here's you can see the third point is psychological factor and time commitments, okay. Basically a trader has higher stress and time commitment due to the constant monitoring of price action, uh, but an investor usually has a lower stress compared to the trader, as he usually don't react to every market fluctuation, but every market fluctuation hurts the traders, okay. The second point is emotional control. Basically the emotional control is very crucial in trading. When you are trading, when you see the prices are like going up down, it's very like crucial to control your emotions, okay. So it usually impact your short-term decision. That's why the emotional control is very important. Whether the investor basically uh, he has a more patience, okay. He can hold the trade in both bull and bear cycle. So basically the investing basically teach us how to be patient, okay. So that's how actually uh, trading and the investment works. So the main thing is basically that people has, before we buy any crypto asset, we should clear like whether we are trading or investing. Many people basically say they want to invest for long term, but at the same time they want fast profit like a trader. This mismatch basically leads to the confusion and poor decision, especially when the price dips in short term, okay. So basically if you are investing, first you should accept the market fluctuations, okay. The market fluctuations are very normal, okay, and you should stay focused about the project long term potential. If the project is like fulfilling your potential goal, you should keep hold it for your potential targets. If project is not like fulfilling your goals that you are expecting, you should cut loss, simple. So if you're trading, be prepared for the quick move and you should set your exit targets, okay. In trading you should be the more active and analyze the chart. So basically before diving into the trading, you have to define your approach, okay, to avoid this type of mistakes, okay. So hope this video will be beneficial for you, and thanks for watching.